Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about the two stocks that I'm probably buying inside our TFSA this week. These stocks are Granite REIT and Aritzia. I analyze both companies in detail in two separate videos on this channel, and I will link a link to those videos in the description box below. Both stocks experienced a drop in their share price in the recent market correction, and in my opinion, they are in the fair value territory right now. In this video, I will talk a bit about each business and will then explain my strategy for buying these stocks during the next week. Before starting the video, I want to emphasize that I'm not a financial advisor and this video is not a financial advice for you to buy, hold, or sell any of these stocks. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. Okay, the first company that I will probably buy its shares this week is Aritzia. Aritzia is a vertically integrated Canadian company which design, produce and sell clothing and accessories mainly for women. And it is a really popular brand between women's. Aritzia sells pretty much everything related to women clothing and accessories, including sweatshirts, leggings, pants, dresses, jackets, sport bras, hats, bags, shoes, belts, and even iPhone cases. At the moment, Aritzia don't pay a dividend. The market capitalization of the company is around 4.9 billion Canadian dollar, and their shares are traded on TSX for almost 43 Canadian dollar at the time of recording this video. Aritzia is one of the few fast-growing Canadian companies, and the share price of the company were able to beat both S&P TSX, which represent largest Canadian companies, and S&P 500, which represent basically the top 500 companies in the US in the last 5 years. They were able to grow their business by almost 17% year over year in the last few years, which is amazing for a fashion business. And they plan to grow even faster in the coming years by expanding into the men's clothing, opening up new stores in US, and improving the e-commerce business. The shares of Aritzia dropped almost 27% from its all-time high in the most recent market correction, and now its price to earning ratio is around 36, its price to cash flow is around 14, and its price to book is around 9.6, which are all at its lowest numbers and the cheapest valuations compared to the Aritzia share price in the last few years, especially if you compare it to the 5-year average of Aritzia stock. I also performed a fair value calculation based on discounted cash flow model on Aritzia before, and even according to that model, the valuation of the stock seems reasonable right now, and the stock is probably able to provide 15% return year over year. In summary, I think Aritzia shares are traded at a fair value at this point, and because of the growth potential, I'm a buyer of Aritzia shares at this price. The second company that I will probably buy this week is Granite Real Estate Investment Trust, which is my favorite industrial REIT and manages several large warehouses and logistical properties in 6 countries around the world, including Canada, US, Netherlands, Germany, Austria, and Czech Republic. I think they also started to develop new properties in Poland as well, so technically they are operating in 7 countries. The largest tenant of Granite is Magna, followed by Amazon, and we can also see stable and large businesses like Walmart and Samsung among their tenants. These large businesses and trusted brands can provide Granite with predictable cash flow for future developments. Right now they pay $3.10 per share annually in distributions with a starting yield of 3.27%. If we look at the dividend history, we can see that they increased their distribution by almost 12% year over year in the last 7 years, which is a great dividend growth rate. The payout ratio for Granite is around 80% compared to their funds from operation, which is pretty safe. Granite share price has dropped almost 10% from its all-time high in the recent market correction, and if you look at the Granite stock chart in the past 5 or 10 years, we can rarely see such opportunities. As such, I think this is a great opportunity to buy this REIT close to its fair value. I already have a fairly large position in this REIT, but I started to dollar cost average into Granite REIT again during this dip on Thursday when the shares were traded around $90 per share. The Granite shares jumped by almost 5% on Friday. I would probably not buy Granite if its share price continues to go up, but I will deploy more cash towards Granite if the share price drops below $90 in the coming weeks. There you are, guys. These were basically the 2 Canadian stocks that I will probably buy this week if the prices of course remain relatively the same or goes lower than this. I hope you enjoyed the video. And if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.